All right. Hi, everybody. Today's January 29th, 2021, and this is the Options Alert Service update video. So before we get started, I want to point out that SMB Training is not a broker-dealer. We're doing these webinars for educational purposes only. Today's webinar does not contain any live positions. Everything is hypothetical and therefore not subject to the market factors of liquidity, slippage, and commissions. I also want to point out that options trading is risky and you should not expose any of your capital to options trading until you have fully understood the risks. Your online broker has a document which explains those risks, so please go ahead and get that and read it thoroughly. Make sure you're comfortable with those risks before exposing any of your capital to options trading. Also, you should never trade options at a level higher than is reasonable for your net worth and net income because they are risky. All right. So with that, I would like to go over the 3 trades that we are in as of this moment, although the January is going to expire momentarily. So let's go ahead and jump in, and then we can kind of do a review after that. So let's start with the January trade, and we'll do that by moving this over here. And we will go back to January. That January trade, I believe, is called number 16. So let's do that. And we will apply. And then we're going to go back to November 6th when we first put this trade on. And as you can see, on November 6th, excuse me, yeah, on November 6th, we initiated the trade, and we were at that point the market was at 1644. The Russell was at 1644, and so we entered the trade at the 1670, 1630, 1580 strikes, which earlier in the day they were not. There was a sell-off on this day, and the market ended up moving back not too far from the short strike, actually, at 1644. The short strike 1630. You would normally have entered an Rhino higher than that, and that's what happened on that day. The market sold off towards the end of the day, and we initiated it earlier in the day, and so therefore the short strike of the butterfly looks a little bit closer than usual to the position. I'm trying to, oh, I see we got to focus only on the January, which is 16. So we'll do that. And then we'll see that the position looked like this on day one, which is unusual because normally you'd be, up around here on day one, but there was a pullback during the day. And as you can see, we were able to get the trade for a small credit, which has been this sort of unusual role we've been in since the beginning of the pandemic, when volatility went through the roof and pretty much has stayed above 20 for the entire pandemic. So we are then going to move to November 9th, where we scaled into the second tranche of the Rhino. And you will see in a minute that took place here. And you can see that we've added the 1690, 1650, 1600 Rhino, but broken wing butterfly relative to the first one, which was 20 points below that at each level. And so at this point, then we are down a little bit of money on the trade, and at this point, the market had begun to rally. And now this second broken wing butterfly was entered at a debit. So now the overall trade is a debit. So if the market runs away from us and we do nothing to the trade, we'd lose money. So that's the case. Now let's move forward to the next adjustment, which was a month later. And this is what happens with the Rhino. It's a very low maintenance trade. So we go out to December 11th, and what happened by December 11th, as is probably no news to any of you, is that we started to get a rally, and we got a really big rally in the um, Russell 2000 index. And so as a result, just focusing on the January trade, which is where, okay, yeah, the January is here. The Russell had rallied from, remember, we were at around 16, I would have said about 1660 or so when we entered the trade. Now it's up at 1911. And this is only 27 days later, mind you. Sorry, 35 days later, mind you. So here we are out here, and the market's all the way up here. All right. So at some point here, we got to start doing something about this because we've rolled up so far. And so what we did was we sold a put credit spread here. And let's see, where we would we have been negative. Yeah, we would have been negative theta otherwise. And so the trade was done in order to become positive theta overnight. That's how far out we were, that 35 days into the trade, we were had already gone negative theta, which is very unusual for a rhino, and it would only happen in the case of an extremely high or extremely intense rally. And then by December 29th, I decided, you know what? I'm sort of thinking this rally may never get back down here to 1700. We're sorry, to may never get back here down to the butterfly's body, which is really at in the high 16s area. And so I went ahead and sold a second put credit spread at 1640, 1620, and that created this structure, which now at least guaranteed us a profit if the market never actually came back. And guess what? Today is the final day of the trade, and the market never came back. And so here we are sitting here 5 minutes before the market's going to close, actually. And as you can see, this trade is going to expire because, let's see where we are here. This trade is going to expire. Let me show you. That's where we are today. And this is some kind of inaccurate number because we're not up 52.26 on this trade. This doesn't make the slightest bit of sense. I don't really know what's happening. Okay, let's just get out of back testing mode here, and maybe we will get a more sensible number. And what finally did happen was, because obviously we're going to expire with no value today, this happened to be done on a Friday expiration trade. And so this will not close at 327 because every option in the whole chain is going to expire worthless. The Russell right now is trading at 2080, 2079. So all these options are going to expire worthless, and the only thing that's going to be left is the net credit from our having transacted all these options as part of this trade. So we're going to end up, that's wrong, we're not up 1236. We're going to end up $126 on the trade, and that is going to be our January trade. And that I'd like to say one thing. When you have a move, we got into the trade, when did we get in? November 6th, so right on here. When you have a move that's this parabolic, and you're in an options income trade, it's pretty good to make a little bit of money on that trade. Just think about being in one of the other positions that, such as a bearish butterfly or something else, which, or an iron condor or anything which has a need for some, some normalcy in the market, some channeling, to be able to get a profit. In this case, we made a profit. Even though we are only at one, it was $126 profit, but it was a move by the end from the beginning of the trade when we were up around 16, whatever we were that day, November 9th. September 9th, we were at around 1670 or so when we put this trade on 1660. The market's now up to, as of this moment, 2082. So that's a move of 400 points during the course of this trade, and we still eked out $126 from it. So I consider that pretty good. And so this trade is not up. This is not down 1264 either. As you can see, it doesn't really matter what the pricing is right now because we know what's going to happen. All these options are going to expire worthless, and we're going to make 126 bucks on this trade. Okay, so that is the January trade, and we're going to move now to the February trade, and that one was actually initiated on December 4. So we're going to go ahead and go to December 4. This is trade 17, so we're going to just focus on that one. And as you can see, on this trade, we initiated it here. It's the January trade. And one thing I want to mention is for capital reasons, we started the January trade in the late January expiration, which was the January 29th. I'm returning the service back to the traditional monthlies, which are the third Friday of the month. And so that is why this trade, this February trade, which what's going on here? See, yeah, the February trade is back on the third Friday of February, which is February 19th. So we have initiated the trade on this day. And as you can see, the market had run up that day, and we were in, we put it in, not at the end of the day, we put it in a little bit earlier. And so we were trading the 1890, 1850, 1800. And so that would be this trade. Oops, what's going on here? I must have something. Oh, why do I have 15 in there? 17, there you go. So yeah, so here we are on day one in the trade. And we now move to, we now are going to move to December 8th. And on December 8th was when we added the second tranche of the trade. And this time I made the decision, which turned out to hurt us, that I was really not comfortable putting a trade on and increasing our positive deltas. And our positive deltas at that time were, prior to this being put on, we were positive deltas. And let me show you that because it's important for you to understand my thinking here. So here we were prior to this extra tranche being put on. This is what we were looking like. Hang on. This is what we were looking like. And you can see our deltas were 407. And if I were to add on a second tranche, it would have made us even more positive deltas. And so I decided instead of doing +5, -10, +5, I did +5, -5, -5, +5. What I did was I took 5 of the 10 shorts at the 1870 level, and I instead sold the 1860s. So I effectively rolled those back, but I didn't roll them back. In reality, what I did was I bought a condor that is with these strikes, or you want to see it more easily, it's the opposite of this trade is what I initiated. I did +5, -5, -5, +5. And the reason I did that was I did not want to add positive deltas to this trade. The market had already run up hundreds of points. I was concerned about a pullback, and all you need is to add positive deltas to a position that already is positive deltas, which is unusual for a rhino in a normal volatility environment. I didn't want to make our positive delta situation even worse by adding another position. So I improvised and turned this. We're still positive deltas overall, but we are now less positive deltas because this position, this condor is a negative delta position. And so you can see the trade has suddenly become a little bit more negative deltas, which is exactly what I wanted at that point. However, guess what? The market never rolled back. And so on January 8th, I finally had to accept that, even though I don't think at that point we had gone negative deltas in the trade, I was realizing the market had run up so far. At this point, we're probably going to lose money on the trade, and we need to start kind of cutting that loss potential down. And so I did so through selling put credit spreads, but you can't get carried away with this. You can't get carried away with this because if you do that, you can set yourself up for a lot of danger. And so while I added put credit spreads on January 8th, I added 2 of them, and you can see this is now, before it was -5, -5, now it's -7, -3. So I sold 2 1870, 1860s. What I began to do essentially is roll back to where they normally would have been some of these short puts. And so I did that. And let me go ahead and look here. And I did that. And this, sorry, I wanted to move this to 17 only. I made that mistake. So now we're here and we are down on the trade -6. Look how far we're out here, -636. We're out this far. And at this point, the potential loss on the trade, if the market closes out here somewhere, is 1446 on expiration day. And I don't want to be in that situation. So I started pulling some of these back, which adds a credit to the trade, which then reduces the potential loss if we end up out there. Now we're going to move to January 13th, and you will see that on January 13th, we also experienced a January 13th, the market was now up to 2112. And so we again added some 2 more of these put credit spreads. So now we are in this position, which is we've just now reduced this down to -1256 if the market never pulls back and we expire it like that, which we'll have to decide whether we're going to handle it that way or not. And then on January 15th, we sold the final, no, I'm sorry. Yeah, we sold the final 1860. We bought it back, I should say, and rolled it up to 1870. For some reason, it's not showing that 1870 strike, 1860 strike, but whatever, it doesn't matter. It's not necessary because it's not there anymore. And so we are now back into what you would normally see as a normal Rhino position. And we now have cut this number down to 1156. So we got a runaway market on our hands. When did we enter this trade? February 4th. So on February 4th, December 4th, the market was here up at, this 1892 area and 1892, 1850, somewhere between 1892 and 1850 during that day. And now the market's already up 2,300 points further from that level, which is honestly, rather hard to handle. And so this is where the trade stands as of, and so we'll go to today and we'll look at where the trade stands. And let's see here. So as of the end of the market today, the trade is down -732. Oops, -732, and we'll be only in looking at the 17 here. So yeah, I'm sorry, we're down minus 672. So that's where we are. And the trade has at this point, we've done a lot to try to kind of cut this back. Now, oh, I'm sorry. What I did was I made a mistake here. I skipped the fact that we sold yet another put spread, which we did on the 15th. My apology. I'm sorry. We did that on the 25th. I apologize. I skipped over one adjustment we did. That was the 25th. And so that did this. See what we're slowly doing here is we're cutting back the, I gotta wait for option view to update, excuse me. We're cutting slowly back on the potential loss if the market never comes back. And now we're at a potential loss of 1,012. But you see, we've added a lot of credits to this and credit spreads to this, and we got to be careful here because if we get a big pullback, we are going to regret having over credit spreaded this trade. And so I made the decision that we are not going to do that, but rather we're going to play it safe. If we have to take a loss, we have to take a loss. This is trading, and sometimes you're going to take a loss in trading, but what you don't want to do is have a disaster. And at this point, we can have a disaster on the upside because the worst we could have is about a 4% loss. So that's hardly disastrous. But what would be disastrous is if we got too close to the market and then we had a big pullback and then volatility went up, deltas went all negative, and so forth and so on. So here we are at the end of the day. And the final result, as I told you, it's probably flipping around a little bit because of end of day pricing. So let's see where we are right now. So right now it's showing us down 962. So okay, now 832. All right, now so that is our that trade now down 772, but then in a minute could go to another number. So we're not going to worry about this end of the day flipping around of figures. Okay, now the final trade I wish to show you is the March trade, and that one started on the last day of last year. And so all we've really done on the March trade, which we've only been in for, pretty much exactly a month, has been this. And we'll go to number 15, 16, 17, 18. Okay. So here we are, having entered this trade. Again, this is a very normal Rhino entry. Must have been a little bit of a rally towards the end of the day. And so as a result, we are start the trade, and we started at a $300 credit. Again, we're getting credits until this market starts to normalize and VIX drops below 20. We're going to probably continue to get credits on these Rhinos. And then on December 5, on December 5, we added the second scaled in Rhino. And again, this time the market's up 1979 up to 1979. It was my feeling that we need to be very careful on this one as well. So I entered this with the Condor as I did the last one. And now that didn't work out for me last time, but my reasoning I think was sound. And so I have decided to do it again. Sometimes you have very solid reasoning and the market doesn't do what you expect it to do. Other times you have poor reasoning and you get lucky. I try to have good reasoning on every trade, and then hopefully most of that time that will give me an edge to make money in the long run by entering trades with ideas that are sound. That's my philosophy. So let's move now to today, because that was the last adjustment on the trade. It's somewhat early days on this March trade, and see where we are in the March trade, and we can analyze why we are there. I guess it would be this one. So the March trade, it looks like it's showing us down $150 as of this minute. And again, the market, ran to the upside, but this one, is benefiting from being less negative negative deltas than it would have been had it been a full rhino. And so you can see, and this is important to understand, take a look at this now. Look at how this is now day 25. So halfway to the end of the trade at this point. If you were over here, we got pulled back into here and volatility stays roughly the same, we're going to be up, $990 on it, something like that. So there's take a look at how wide the profit zone is on this trade as you get to day 25. It starts here, 1872, and the profit zone goes all the way to 2140. So anywhere in there on day 25, we're going to be up money, and pretty good money, $1,000 here, for example, if we get there. So that's what the rhinos are all about. It's playing this T+0 line, remaining very flat, and just getting additional theta. And so that's where we are on the March trade. So if I had a guess, I'd guess the February trade, unless we get really lucky, is not going to be a winner. The March trade, I think, has good potential. We shall see. We made money on January. So just to quickly review where we are, we just took a look at the January, the February, and the March trades. And now this was the Rhino Alert Service for all of 2020, where we made $7,088. And this year so far, we're up to 86 in January. We don't have any results for February or March. My guess is February is going to be a negative number, which is going to take us into negative territory for the year. And hopefully we can make it back in more in March and be back in positive territory, but we shall see. So in the meantime, I want to wish everyone a great trading. Be safe out there. Take your precautions with the pandemic. We'll all get through this and we'll get back to a healthy society and great trading. So take care, everyone, and we'll talk to you soon.